Wow, that will be hard landing for every client of Wells Fargo who have Wells Fargo credit card. I'm not an exemption. I opened this card in 2016. It helped me to improve my credit score and now it's about 800. But unfortunately, it seems like hard time for Wells Fargo clients is coming. So guys, Wells Fargo is shuttering all personal lines of credit. It seems that our credit score are about to drop. And customers are given 60-day notice of the change and will be required to make regular minimum payments on any remaining balances. Why is Wells Fargo doing it? What do they know that we don't know? What influence will it have on the regular customers like you and me? That's just a part of questions I have now. To be honest, I already seen such a situation in 2008 when banks squeezed lending and initiated a sharp slowing of the world economy. They stopped giving customers money because they realized that people would not be able to return them. Global crisis one more time? Doesn't seem real, but there are still a lot of questions. And it may be a real reason why Wells Fargo is starting to protect its money. Folks, if you disagree with Wells Fargo, click the like button to signal the YouTube algorithm that Wells Fargo is doing something really bad with their clients. Okay, so let's check what exactly has happened with Wells Fargo this week. You know what is really awkward? That Wells Fargo Bank is shutting down all existing personal lines of credit in the coming weeks and has stopped offering the product. The revolving credit lines, which typically lets users borrow from $3,000 to $100,000, were pitched as a way to consolidate high-interest credit card debt, pay for home renovations, or avoid overdraft fees on linked checking accounts. But how Wells Fargo explained it, and what did Wells Fargo say in their statement?
Wells Fargo recently reviewed its product offering and decided to discontinue offering new personal and portfolio line of credit accounts and close all existing accounts. This move would let the banks focus on credit cards and personal loans.
Strange. But you may ask, personal lines of credit and credit cards, what is the difference? A personal line of credit is similar to a credit card. Users are given a credit limit based on their credit history and income, and they can borrow up to that limit on an ongoing basis. So users pay interest on the amount of credit they are using at any one time. They often use to consolidate high-interest debt at a low rate or pay for expensive projects like house renovations, while credit cards are being used mostly in everyday life for shopping and other small stuff. For example, in my case, on this card, I have about 20,000 credit lines, so it helps me sometimes just to get some bonuses from Wells Fargo when I'm purchasing some products or services. But the main question right now, why should we worry about this step from Wells Fargo? How will it influence Wells Fargo customers? So closing the accounts could ding customer score because closing the account will affect person's utilization rate, length of credit history and number of accounts. So in my case, I have 5 different cards from different banks, and it seems like if the Wells Fargo just closed this card, my average credit history decrease significantly. This is a big problem for you and me, guys. But of course, the effects will not be uniform though. If you have a lot of open lines of credit with real high limits and you keep the balances low, it might not have much an impact. On the other hand, if you don't have many accounts or a high utilization rate, then it will be more negatively affect your score. That's a problem. There is a lot of criticism regarding Wells Fargo's decision, even as senators showed their disagreement. So, for instance, Elizabeth Warren, a frequent critic of the banking industry, denounced Wells Fargo's decision to pull back the credit lines in her Twitter. But no matter how much more hate they will receive, the decision will stay the same. Why? In addition to the potential crisis, there is one more reason why Wells Fargo is doing this step. The company was forced by Federal Reserve, and not now, but back in 2018. The news comes more than 4 years after a scandal erupted in which the bank admitted to opening millions of fake accounts, as well as forcing customers to pay for unneeded auto insurance or charging unnecessary mortgages fees. So Federal Reserve in early 2018 ordered Wells Fargo to keep its assets below $2 trillion until it had improved its governance and risk controls following a wave of sales practice scandals. And closing off personal credit lines is one of the ways of keeping assets below the mentioned number. That's maybe a logical explanation. So folks, what should you do? What should I do? First of all, make monthly payments on time. It's critical for customers with a balance to pay attention to the payment plan detail in the letter Wells Fargo is sending out. Make monthly payments on time. They are still going to get reported to the credit bureaus. That's very important. Don't forget about your payments. The second step, open personal lines of credit at other banks. It's an opportunity for you to look at a rewards card or personal loan with a lower rate. Go out and compare credit cards to loans and Wells Fargo to other institutions, financial products offering. For example, Chase, Goldman Sachs, Bank of America. That could be a lot of options for you guys to choose from. And the third step, monitor your credit reports and credit scores. In case you see a drastic change, you can lodge a complaint with the Consumer Financial Protection Bureau. Thank you for watching this video, guys. As always, don't forget to smash the like button, subscribe if you haven't already, and go get up to $2,500 worth of free Bitcoin if you sign with my link for BlockFi, or got a free stock from Webull or Robinhood using my referral link in the description. Love you, I'll see you soon. Bye!